Joining me right now is Assistant to the President for Trade and Manufacturing Policy, Peter Navarro. Peter, it's great to see you.
Hey, Maria, welcome to the swamp.
Thank you. You've been working a long time on USMCA, you and Bob Lighthizer and your colleagues. How important is this? What is the impact to economic growth in the next couple of years?
Well, I got a lot riding on my streak here because I predicted 30,000 on the Dow if USMCA got passed and we got lower interest rates. So both of those things are going to be in place. I'm thinking 30,000 maybe in January sometime.
Wow.
So let's get it going.
So the market continues rallying. Well,
here's the thing. As you and I both know, the stock market is a leading indicator of the economy. President Trump has built the strongest economy in modern history, putting in place all the trade deals that this president has put. Let's think about this now. We got a Japan deal, a South Korea deal, a Canada deal, a Mexico deal, and a China deal. That's like well over half of all trade that we deal in. And every one of those deals are growth-inducing. And when this economy grows, the stock market goes up. And that's exactly what's happening right now.
Is India next?
Yeah, we're engaged with India. The problem, I like to joke, India is the Maharaja of tariffs. They literally have the highest tariffs in the world of any large country. It's ridiculous. President's a big fan of
tariff. That's funny.
President's a big fan of the Reciprocal Trade Act, which would allow this country basically to charge higher tariffs if a country won't lower theirs. And the study I did showed that 90% of the time, Maria, 90% of the time, India charges us higher tariffs than we charge them. So yeah, we've got to get India to belly up to that bar and lower their tariffs and make nice with trade.
And how far away is a deal with the UK and Europe? What do you think about the EU and whether or not we're going to see increased tariffs on cars coming into the U.S.?
With the EU, with the UK, get my letters right here, we would have had a deal already with the UK if Brexit had been solved. That's the only thing holding us up. I mean, the nice thing about the UK is our economies are very similar. It's easy to do trade deals between similar economies. We're ready to go, so let's let Bojo do his thing, and then let Bob Lighthizer and the president do their thing. And the president and Bob Lighthizer have shown we know how to do a trade deal fast. I mean, it is remarkable how fast.
I want to make sure we get to everything. Number one, what kind of an impact to GDP are you expecting USMCA to have?
The conservative investment by the International Trade Commission was about a point over time. That's going to unroll over time. I think it's going to be much more. The bigger impact for me with USMCA is the rebuilding of our auto industry as a global hub of auto manufacturing. That's with the regional content, local content rules. That's 75,000 jobs conservatively estimated. So President Trump is like a jobs machine. Everything he does, everything he thinks about every day is how to create good-paying jobs for the people in this country who work with their hands. He has turned the Republican Party into the party of the working class. That's remarkable.
Yeah, that is a good point that you make. Let me turn to China trade. There are new concerns this morning about agricultural buys due to targets set up to $50 billion. That level more than double peak sales from before the trade impasse, according to the Wall Street Journal. Here's what Bob Lighthizer told me yesterday about the Phase 1 trade deal that you just did.
Is this agreement going to solve all the problems between the United States and China? No, for sure it will not. But it has real structural change. It's not just about purchases. And it's really important that people understand that. This has real protection on IP, real protection against tech transfer, financial services opening, currency provisions. There are agricultural barrier eliminations. And then there are these purchases.
A lot of things there. Let's go through the ag purchases. You've talked about $200 billion in ag purchases over the next 2 years.
No, let me do the numbers for you, because it's $200 billion over 4 categories: agriculture, services, manufacturing, and energy. Okay?
Yeah.
And it's $200 billion over the 2017 benchmark over 2 years. So it's about roughly $100 billion incremental a year. That's roughly doubling what we buy now. Okay, so in terms of the ag, that's 40 to 50 billion. China is having a real problem agriculturally. They're going to need American farmers to feed their people, particularly with pork, and other things that are going on there. So there's going to be plenty demand for China if China unleashes it as they promised to do. But we're also going to sell them a bunch of energy, manufactured goods and services.
I feel like this is back to basics. When you were first talking early stages of a China deal, the Wall Street traders were speculating that the whole point here was for the U.S. to sell China energy. Don't get your energy from Russia.
Sure, but let's understand that the purchases are here, right? That's a really great thing for America, but we've also got a deal that addresses structural issues on intellectual property, counterfeiting, forced technology transfer, and the best part of the deal for me, based on historical understanding of China, is a strict enforcement mechanism. We basically have a 90-day clock in which Ambassador Lighthizer can register a complaint, and if it's not settled adequately to our satisfaction, proportionate penalties can be imposed without China retaliating.
So you've got like a snapback in
I don't like to call it a snapback because that assumes that there's something in place that we got rid of and we're snapping back to. The point is that if they steal our intellectual property, if they keep flooding us with counterfeits, if they force technology transfer and we find them doing it, Ambassador Lighthizer has the authority, and the Chinese have given it to him, to take proportionate penalties. So,
but it's not against the law in China, right? I mean, what about all these new cyber rules that they came out with that basically say that we're giving up all the encryption keys, that we won't be able to protect intellectual property?
It's against the agreement. And that's what,
but it's not against the law in China.
If they want to like steal stuff from each other,
no,
that's
stealing
fine.
from American businesses. I'm talking about. So if you find out that they break their promises, you snap back more tariffs in place.
The enforcement mechanism makes it all work because it's put in place not just for phase 1, but for the whole agreement. So phase 2, phase 3, the enforcement mechanism basically is what makes this work.
Is this the new narrow set of rules to limit the technology transfer and the exports to China? Is that what's happening here? There's a now narrow set of exports expected to China?
I don't understand the question.
In other words, is there new rules coming on that the administration is putting to maybe narrow the amount of exports going to China to limit the amount of theft?
Oh, well, there's separate export controls that we've had in place since Tiananmen Square. Those remain in place. Look, this agreement, broadly construed, begins what is a long march, if I may use their term, towards structural reform of the Chinese economy. And it's a great deal for America. The big picture here, as we go into 2020, is President Trump has put in place deregulation, tax cuts, an amazing number of trade deals, any one of which would have been an achievement for a single presidency, and he's got like 5 of them on the table.
And
I mean, it's amazing.
On the day that the Democrats want to impeach him.
Yeah.
So
impeachment, jackals, and heat. That's all I can think about when I think of the Democrats.
Peter, thank you.
Yes, ma'am.
Peter Navarro, we'll be right back.